What's going on, guys? What is up? What's up with everybody? How's everybody doing? Let's get everybody in here. Let's get this camera set up. Everybody doing good? Kiowa in here, Mike in here, Repstein in here. Swipe right and share for me, guys. Get everybody in here. Darkest Clown in here. Jay Butch. Hosby, that's good. Happy King Louie, what's going on? What's going on, everybody? Yep, we all trying to make money. Swipe right and share. Everybody swipe right and share. Let's get 60 people in here. Let's get those 66 people back in. I'm on a little bit late. That's my bad. That's my bad. But, yeah, dinner ended up taking a lot longer than I thought it would, alright? And I just got iOS 9, too. That was kind of right as I updated, I was like, crap, I'm supposed to be doing a scope right now, so that took a little bit of a long time. Part 1, there's a replay. I mean, you can go onto my account, look up TraderGarrett, then look up broadcast, and look at the most recent. And then mine should be right there. Alright. You guys want to get started? You guys ready to get started? Okay. So, get your pen and paper, because we're going to get started. If you want to follow along, go to a GBP USD chart on a daily, okay? And then zoom in. Zoom in. We are focusing right... I'll show you guys we are focusing right around this area with GBP USD. And then, so we'll get this back to the where we were. Zoom back out. And then go to GBP USD on a daily, and then go to a line chart. Okay? And actually zoom back out so you can see a little bit more. Okay, so this is my top swing trading strategy. When I say swing, I mean trading that tends to be held for a day to a longer than a day, okay? So, what do? First, you go onto a line chart and you identify areas of what? Support and resistance zones, exactly what we learned yesterday, right? Okay, so the first thing you're going to mark actually should be the most recent high and the most recent low, which is we're going to consider down there, okay? So, what do we have here? Right in this zone, we have a resistance zone that goes from up to here all the way up to there, okay? That is a zone of resistance. We could see price reverse anywhere in this zone because look, price got all the way up to there. It's not, I mean, that's not really we can't define an exact price of resistance, but we can define a zone, and now we've done that, okay? So now that we've done that, we are looking for price to reach one of these zones, areas, whatever, okay? So now we have one zone right there, daily, GBP USD on a daily. If you look over here on my this top right dashboard, you'll be able to see what pair I'm on and what time frame I'm on. Daily, GBP USD, okay? So, what's another one? Right here is a zone, okay? We've also got another zone right here, okay? Look, from here, so look, we have all the way down to that most recent low, we have a zone, okay? And there, that's our zone. Whoops, I don't know why that went up like that. Okay, so now look, we're just identifying all of these zones of support and resistance that we're looking for price to come to potentially take a trade, okay? So look, we have a zone of support and we have a zone of resistance. That's really all we need. Let's keep identifying some, though, just in case. So we have a trend line. What do we identify a trend line? We find areas of higher highs or higher lows and or lower lows and lower highs, and we connect those prices. And what do? They need to... Someone tell me one of the criteria for trend lines. What's one of the criteria for trend lines? Somebody had to learn something yesterday. What do we have to have to consider it a trend line, a valid trend line? Anybody can answer? Come on, someone answer. I'm not going on till we answer. 2 touches. 2 touches. 2 touches is what we want. Okay? 2 touches. So look, is this a valid trend line? This line that I drew, is that valid? Is that valid? Can we consider that a valid trend line? Yes, we can. We have 1, 2, 3. This is a great trend line, really. There were a lot of potential trades you could have taken off this line. And then it broke, and now it's being used as resistance, which is very common. Okay, so as you guys can see, let's identify one more line that I think we can use right about here. No. Here. No, I don't like that. Never mind. So these are our lines that we really want to worry about, okay? And actually, I think we do have one more line that we want to worry about. Right there. And what I'm looking at here is this support, and it was broken. Okay? And resistance right here. Okay, so we have these lines drawn out. Let's go back to a candlestick chart. That's now we've identified all of our support, all of our resistance. Where's candlesticks? Okay, right there. So look, now it looks a lot better, okay? See, look, we didn't find support right off this line. We found it in this zone, and people probably shorted at the break of that line. And look, they would have got faked out. It just doesn't work. You have to have, there is no such thing as an exact price point of resistance and support. And if you think there is, you're probably going to be burned on most of your breakouts or breakdown trades. It'll hurt you. Zones usually work better. Now, you know what? If you have a system and it's an exact price point and it works for you, good for you. Keep doing that. But for me, I find that zones work much better than exact price points. Okay, so we have these lines. Now let's go over an example of a trade that I took most recently, okay? Zoom in. Nope. Zoom in. Zoom in. Zoom in one more time. No, I don't like that. Right there. Okay, so we're still on a pound USD daily chart, okay? We're still on a pound USD daily chart. We're getting in to the strategy, the candlestick patterns, and those sorts of things, okay? So, what is my favorite candlestick pattern? I do not know what happened to brightness right there, why that just got really dark. But, what is my favorite? This right here. Whoa. That was weird. Oh, damn it. Okay, I don't know what I just did there. Okay, so right here is my favorite, okay? What I just put a rectangle in is called a bullish engulf or a bearish engulf, whatever you want to call it. They work very well. In fact, I know there's multiple people here who can vouch for me. I made a trade on this, and I took 230 pips, and I could have took 400 pips. I made a 400 pip call over 1, 2, 3, 4, 5, 6, 7, 8 days. 9 days. 9 days. 9 days. But I had to take profit at a conservative level. I should have taken profits here, honestly. I should have taken profits like at 100 pips. Okay? So this is called the engulf. Now, to explain this engulf with you, you really want to look for this area of, you want to look for this to happen in one of your zones. So, look, we had our zone. If I zoom out, not zoom out. We have our zone. Prices come up to our zone, okay? Oh God, I shouldn't be using marker on my screen. That was a bad idea. Okay, it's dried out anyways. Okay, so we have this zone that we're coming to, right? And prices reached it. Now I'm looking at it. I'm waiting for something to happen that's interesting. And what happened? Bam, the next day we had an engulfing. I buy right at the open of the next candle, because we've engulfed this candle bullishly at a zone, indicating that buyers, aka bulls, buyers have come in and been able to push the price above the most recent high and push the price up to most recent zones, and now we fell. And look, people are like, okay, we're coming up to this zone here, this zone of resistance. I'm going to be looking for a pattern. Now what happened? Nothing. So I will not take that trade. Now you can typically play a candlestick failure off a line like this, but with my strategy, engulfs tend to look a lot better, okay? So that is one strategy, the engulfing pattern. Now let's go over the steps. Step 1, you go to a line chart on a daily or a 4-hour, okay? What do you do next? You go to a candlestick chart and you just wait for price to come to one of those zones. Patience. Patience. You must have patience, like we went over yesterday. Patience is key. Okay, so I waited for a couple of days for it to slowly trudge down to this zone, and then bam, we have this engulf. This is called a bullish engulfing pattern. That is what it is called. And then zoopity zoppity zoop, it went up. What? Okay, and then yeah, it went up. Okay? I should have held. But how was I supposed to know it was going to go up another 200 pips? I didn't know. Okay? So do you guys understand that? Let's think of questions. So when I say a candlestick price action pattern, that is called a bullish engulfing pattern. So let's look for another one right here. That's an engulf. That's an engulf pattern after I guess a downtrend. You can't even consider that. But look, it's off of a zone of support right there, and right there. Now look, bullish engulf, you buy, you make make what, 90 pips the next day. Just 90 pips without even having to look at your screen. You just say you take profit, 150 pips. Okay? Why are people leaving? Can we share this feed, please? And at least if you're going to leave, give some hearts. Alright? So, because believe me, I'm not doing this just to waste my time. No. Your next target should really be the next structure, support, or resistance zone. So really, my take profit should have been here. Right there. You see where I'm pointing at? That. I should have had to take profit there, but I had a feeling that's not very major, that it was going to break through. So I set it there. So I set it right here. Okay? That's just you typically do it at the next structure or support resistance. Alright, so are we getting this? Are we getting this nicely? Are we confused? Are we okay here? I mean, I just want to answer any questions. Right here, here's another bullish engulf. Buy, and look, if you would have bought, and here's how your entries and exits work. Okay, I'm going to zoom in, and then zoom in here, and then put this down. Okay. So we're looking specifically at this candle right here. That bullish candle. This is how we enter stop losses and entries. So our entry was here, right? Our entry was right here. Excuse me. Right here at this open. At the open. That's where it was. So we set a stop loss below the low of our entry candle. So our stop loss would have been right there. Right there, okay? Just below the low of the candle. And look, it never even attempted. Okay? Every trader should have respect for risk. Everything in life has risk. Driving has risk. Everything has risk. Everything. That's why I hate when people say, oh no, trading's too risky. Well, really, I mean, all you have to do, driving's risky, all you have to do is get the knowledge to drive, and all you do with trading is you have to get the knowledge to trade. It's the exact same principles. Yes, you'll get past the fact of riskiness once you have a knowledgeable system that is working. You will just be taking trades, and you know what? No system works. So then when you lose, you have to consistently keep trying. This is what I've learned. To test a strategy, you must use it for 6 months. If you're profitable within those 6 months, if you are profitable 55% of the time, you're still profitable. So it is a good strategy. No, it's not gambling at all. How long have I been trading? 1 year and 7 months to date. Yes, you have to have a risk plan. You're completely right. You are completely right. You're right, Michael Tanu. Giving hearts and staying here has no risk to your life at all. Okay? So, that is what I'm talking about, okay? Hey, whoever's having the problem with the small blue candle, look over. I think you're looking at the wrong thing. I think you might be looking right there. right, where's my mouse? Right there, instead of right over here down near the bottom of the screen. Okay? Alright, so everybody give me what happens. So when do you enter this trade? You enter at the break. This is an engulf, okay? So you enter when you see an engulf where price opens down here and closes above the open price of the candle. Right there, that is an engulf, okay? So your entry is right here at the close of the candle, at the close of the engulfing candle. Yes, we're going to do multiple pairs. We're going to do multiple pairs. All right. Now, we're going to look at a pair like I said, this is not going to be nearly as formal as last night's scope was. So I'm going to have to go look on a 4-hour time frame now and look for a pair for you guys to do. So I've zoomed out now. I'm getting back in. Charts, there's our screen. Okay, alright, we're good. I don't have a PowerPoint set up, so that's kind of funny. I mean, I didn't take the I feel like PowerPoint wasn't even as much helpful except for taking notes. Okay? So, let's go to a 4-hour. If somebody, honestly, I know this doesn't sound very good, this strategy is a killer, and I cannot wait to... I've made over 520 pips in the last 4 days with a strategy that I'm using with day trading. And I'm not joking. There's no need for me to lie to you guys. There's no need for me to lie to you guys. Okay? Yes, there are certain times to trade. A smart trader does not trade all day. They trade in the morning and at the close. They don't mess with all that BS and the... No, not just Bollinger Bands, but they don't trade within all the BS within the middle of the day. I'm looking for a good engulf candle that'll work for us. Let's go to a line chart. Okay, so we've got one. We've got one. Okay, go to Euro USD on a 4-hour. This, oh, by the way, only use this on daily and 4-hour, please. Do not do this on some random 15-minute charts. And because usually when you see these patterns within 15-minute charts, they're just interesting price action patterns. They're no confirmation. Alright, so we good? Are we good? Okay, so right here, we do not have a zone. We have a line, because that's typically where price bounced. That's where it bounced off of. We don't have a zone in this necessary case. We're looking around the line, okay? I mean, if you want to be technical, I guess we kind of have a zone right there. I mean, that's basically a line, people. Come on. That line, that rectangle that I just drew is basically a line. Okay, so on Euro USD on a 4-hour, we have all these, sorry, hold on. We have support, 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 support. So we've hit this line 3 times before coming down to it one more time. Okay, so look, this is all we care about. All right, you know what? We're going to go through the whole process. We're going to identify some more lines. So right here, right, I'm going to go with right there and say that we have a zone right about there. So there's another zone. Okay. All right, let's look for something else. Let's look for maybe a trend line right here. No, that doesn't work out very well. What about here? No, I don't see many trend lines, and I thought there was a trend line on a 4-hour. Maybe it's on a daily. Okay, so we have this. We're going to use these zones, okay? we have a zone, a resistance zone here, and a zone here. And just for the hell of it, we're going to identify these, this high and this low. Okay? So those are our lines. So let's go back. So we have these lines, just like we MetaTrader 4. So we have the, that's our platform. The platform is MetaTrader 4 way fast whitey. So we have these lines, as you guys can see, and zones. So we're looking for price to come to these zones. So look, price is coming down to these zones. We're going to excuse me, I just completely lost my train of thought. We'll go back to a candlestick chart, okay? Zoom in. Right here is where we're focusing, okay? Right here. Look, so we've had a continuous downtrend. We're coming down to a zone right here is where we want to enter. That candle. That candle, okay? Where I have that arrow placed. In fact, here, just where you see that arrow, that candle is where you want to enter. This is your engulfing pattern. Those two candles. Sorry about the blurriness. I'm just trying to get you guys can basically see what I'm trying to get at. So, we have this zone. We found it in the zone. And this is our entry candle. So I want you guys to take me through this process. 4 hour. Take me through this process. What do we do? What do we do first? Somebody tell me. I'm not explaining it to you again. I want to make sure you guys are learning because I'm not always going to be there to tell you what to do. What do we do? That doesn't matter. Donkey pedal. That doesn't matter because you're about to learn why it doesn't matter. Why that does not matter. No, you don't wait for the next candle. Yes, Mikey Trojan, thank you. Okay, so as you can see, yeah, you're right. We do have a down candle. So we're entered in here. We're going down. You shouldn't be. That is risky. That is, you're risking yourself when you. That's technically you pussy out. I mean, come on. You have a stop loss set for a reason. So there's our stop loss. Right below the low of the candle. Right below the low of the candle. Did it touch it? No. So you do not exit. Do not exit. You have a stop loss for a reason, people. Your stop loss always goes below the low of your entry candle. Please write that down. Please write that down. Your stop loss goes below the low of the entry candle. I guarantee you, if people would have bought here, if I would have told people to buy, they would have been like, oh, this Garrett guy, he's full of it, and it's going to go down. Really? How many pips stop loss? You know, there isn't a certain amount of pips, but look, so we're risking whoever's the one who keeps saying you identify your, I think that's that Whitey Way guy. Yeah, you're right. You have to identify your risk, okay? So look, there's a 30 pip stop loss. We're going to round it off and say 30 pip stop loss. So what do we want to make? We at least want to have a 1 to 1.5 risk ratio at the very minimum. Never want 1 to 1. It doesn't really help you out very well. So you want to set a take profit of 45 pips at least. At least. And did you get that? Easily. So what's up here? Actually, yeah, your next, I guess your next, so let me zoom back out so you guys can see a little bit better. This is, okay, that's good. We got a good screen here. So, there is no such thing as a max or minimum stop loss. It just depends on your entry candle. Okay, so look, we have, this is really barely a structure support, but that's where we're going to shoot for at least for minimum profit target. So if we enter here, right, and then we go up to there, that's 50 pips. That's 50 pips. That's like, what, 1 to 1.7 risk to reward? That's not too bad. But really, you want to set it up to like around here at 115 pips. So you have over a 1 to 3 risk. That's like 1 to 3 and 0.75, something like that. That's a great risk to reward. And if you're confused by this 1 to 3, what I'm saying is you risk 30 pips, so you want to make at least 60 pips. So you've risked one set of 30 pips to make 2 sets of 30 pips. And it's the same. And it's the same thing, okay? So if you risk 20 pips, you want to make at least 40 pips. So you risk... I need a whiteboard. I really need whiteboard. No, pivot points are not take profit areas for this strategy alone. Really, I don't even trade. I don't have all these indicators with this strategy. Okay. So, and sorry, you guys couldn't see that next structure area, that next most major area, right there is what I was looking at. So if your take profit was right there, and you enter here, you hold it for what? I mean, you entered on what day? You entered on the 23rd of September. What? August. Wait. How? How do you enter on the... God, I need to call Pepperstone and ask them why my time is so messed up. I specifically said I am a US user, and they're just like, what? No, this isn't July. 9 is... I mean, okay. So either way, if that is your entry and you are risking 30 pips, you must have at least a 45 pip take profit. No. You do not want a 2 to 1 risk to reward. That's terrible. 2 to 1 risk to reward is absolutely horrendous. Okay, so do I close at the limit stop, or do I just let it run and pull closer? No, you're going to want to set your take profit. And no, really, you don't want to do a limit order with this strategy. You want to be watching and get in at this open. So you got in at this open, and you make a minimum of 50 pips if you're smart. If you're stupid, you lose 20. But if you're really smart, you make 115. Okay? So, is anybody confused on risk to reward? Is anybody confused on that? I feel like there's a lot of people confused on the risk to reward ratio thing. There is no daily high indicator on MT4. King Louis, are you good? You're not confused, Send. You're not confused. Everybody. Is anybody can hear? Four-hour Euro USD. Yes, your risk to reward. Think of it as like you risk. I don't even know what to think. You risk one set of something. It's basically like your money. You're risking $1,500 in a trade to make $3,000. So what is that? That's a 1 to 2 risk to reward ratio. Yes, that is right. Whoever said if you're risking 30 to make 60, that is a 1 to 2 risk to reward ratio. If you risk 30 to make 30, that's a 1 to 1. Basically, yes. 2 days. Alright, King Louis. Alright. Yes, alright, so that is your engulfing pattern. That is your engulfing pattern. Now, there's something even better. No, I'm just kidding. I can't believe I just said that. There is not something better than that. But there are some other patterns. Okay? Right here. Who can tell me what that candle right there is? What is that? What is that candle? This candle. Not that candle. That candle. Hammer. Good job. I'm glad you guys knew that. Most people do know that. Now, why would you not take a trade right there? If you ask me, that's a price action pattern off of a structure, support, and resistance zone. Okay? So we have a support zone here. And look, we have another price action pattern. That's the key. You have, if you're looking for these price action patterns, you must look for them to be happening on a support resistance zone or a trend line. So look, we have a hammer. Now, I'm going to explain to you the anatomy of a hammer. Okay? So, or the thought behind a hammer. So look, as you can see, it has a very low, very long. What's up, Balky? I'm still on 4-hour Euro USD if anybody's curious. Nah, I don't use the 4. The most I'll go is like an evening star and a morning star. So the max I'll go is three candlestick structure patterns. Okay, so what do we have here? What happens here is, look, we have lots of sellers within this candle. At first, they were able to push it down, but buyers were able to take control and push price back up near the open. Now, if you have a huge hammer, a huge top wick, it's invalid. You want a very small top wick, ideally a no wick at the top with a large wick at the bottom. Okay? So we're at a structure, support, and resistance. We close bullishly on a hammer. What do? You buy. Typically, better to wait for better confirmation, you wait for a bullish candle to close above the high of this candle. So really, your best entry would have been here, whereas your smarter entry would have been around here. As you can see, it went down. But what do? You place your stop loss just below the low of that candle, right there, and it never got hit. And if you hold, what happens? Typically, so look, what are we risking? We are risking, okay, so we're risking quite a bit. We're risking 45 pips. We want to make at least 90 pips. So we want to take profit of really the next high at 140 pips. You want to set a 90 pip stop loss. Take profit. We risked 45 pips. We risked 45 pips from here to here. Stop loss was never hit. You set a take profit of 90 pips, and bam, you're off to the races. Let it go. And if you lose, you know what? Come back and make more the next day. Entry, your smart entry really would have been here at this, after a bullish candle closed above the high of your hammer close, okay? Do you guys understand that? Is that confusing or not? So if you enter here, risk 45 pips, you set a 90 pip stop loss or take profit, and so basically right there, and bam, you got hit. Okay? Does that make sense to you guys? Does that make sense to you guys? You never want to risk more than what you have the potential to make. Never. Okay? On this case, you probably could have bought at the hammer, since it was after a continuous downtrend. You probably could have. It's just, in my experiences, you sometimes the hammers do not work. 1 to 5, that's pretty insane. But that's good. That's good that you have that. That's good that you trade like that. That's very good that you know to never risk more than 1 to 5. That's actually quite a bit. But You know what? That's your system. Go ahead and use your system. I don't know how I'm tired. I took a 5-hour nap today. I went to sleep at 3 and I woke up at 8 and I thought it was morning and I was just so out of my mind, like, whoa, what's happening right now? But, alright. So, you guys ready to move on to the next pattern? No problem. No need to thank me, guys. I like doing all this. How am I tired? Ugh. Next pattern. What pattern should I do? Hold on a minute. I'm gonna do something here. I'm gonna give you guys I'm gonna look for something real quick. I just had to set that down. I'm just, cause so I can, look on my screen real quick and look for something. Stay here. I'm about to show you guys the next pattern. Alright. I'm just looking for that pattern. Alright. I think I can find a couple. Okay. Alright, let's see what we got here. Whoa, you guys can like see none of that screen. Oh, duh, because it was zoomed in. Alright, we're going to do the morning and evening star. And you know what? No, I'm not. I'm giving you guys one strategy per night. And I just gave you my swing engulf strategy. So, and by the way, this goes for the exact same... Wait a minute. This is a morning star pattern. Right here, what I was just explaining to you guys is a morning star pattern. That is a morning star, and I'll explain that to you guys tomorrow. That is a morning star. Did anybody notice that? That was a morning star. Great. That's actually pretty cool that I don't know how I didn't notice that, though. Tomorrow I'm going to go over... See, I don't use morning stars, though, very often. I usually just do hammers and engulfings. Yes, the engulfs work for shorts. It's everything flipped, though. So, what am I gonna... I'm gonna show you guys an example of a short right now on an engulf. And then oh gosh, I just about stopped the broadcast. Right here. So look, this is... What you want to look for at these structure zones of areas of support and resistance is something like this. When it comes to bearish engulf, don't worry about the blurriness right now. Just all you want to know is the knowledge. Okay. God, see, that keeps happening. Okay, right there. So look, we have this candle here. We've had a continuous uptrend. And then, bam, we drop. So where's your entry? Your entry is right here at the open of this candle. So you've engulfed this candle bearishly at in this case, resistance zone. So you short. Your stop loss is just above the high of that candle, not the low, because it's shorting. It's just flipped, just above the high. So what are you risking? You're probably risking quite a bit in this case. You're risking 55 pips. So you want to at least make 110. So if we go down, 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 you want to set your take profit of 110 pips, right? Someone tell me, again, what is our minimum risk to reward ratio? Very minimum risk to reward ratio. The absolute bare minimum risk to reward ratio for this system. What is it? No, not 2 to 1. Not 3 to 1. Where are you guys getting all this? 1 to 1.5. I don't know where you guys got 2 to 1 or 3 to 1, but maybe you guys meant 1 to 3. But 1 to 1 and 11, oh my god. That's like impossible in some cases. But so stop loss is at right here. So our stop loss is 55 pips up. So you set it at a very minimum of 110 pips take profit, and it would have been hit. You engulfed bearishly. Sellers have taken control. You short. Next couple of hours, you know what? Doesn't go your way yet, but look, your stop loss doesn't even get closed, even come close to getting hit, and then bam, you're off to the races with a short. You wake up the next day, and you're like, ooh, yay, look at me making some bank. Okay? That is your engulf. That is your swing engulfing strategy. That is my favorite swing strategy. Questions. We are at the question time. Questions. What's up, Balky? Questions. How did I create the rectangle? Okay, yeah. Actually, some of you are going to have rectangles that, like, fill with color instead of, like, that. Just look here. I'm going to zoom out now. Like, so, if we have this, so look. We have these these rectangles and triangles and circles. Look, the problem, you're going to want to go to rectangle properties, draw out a rectangle right now, and then click on it and go to rectangle properties. So, let me go over that again. Draw out a rectangle, right click, rectangle properties. Okay? Then you're going to go to parameter, and then you're going to, actually no, you're going to unselect draw object as background. So look, if I click draw object as background, it fills. So what do I want to do? You want to unselect draw object as background, and then bam, you have just a little outlined rectangle. Okay? Next question. Next question. I'll take 3 more questions. You have to be looking at the screen when you spot it. How do I choose what lot size? I have a whole trading system that works that tells me how many lots to trade. So say I'm risking 5% of my account. I'll divide that by, I was just looking for my phone trying to get a calculator out when it's literally sitting right in front of me on a tripod. But, oh God. But what was I going to say? Typically if I'm risking 5%, at 1 to 200 risk to reward, or not risk to reward, 1 to 200 leverage, I'll divide that 5 by 250, and I'll do and that whatever I get is how many lots I'll trade. So if I'm risking, say I have a, come on, someone tell me, what's 5% of $9,100? What is 5% of $9,100? $9,100 divided by, or times, okay, so then divide that number by 250. Divide that number by 250, someone for me. Because that's how much one lot costs on my leverage. Okay, so 1.82, you're above, so if it's above one lot, if it's 5 and above, give it a shove. That's like a 5th grade rule. I round that up to 2 lots. I will take 2-lot trade. Okay, does that make sense? I can't give out my broker. Don't use a trailing stop on this. You know what? I don't like trailing stops just because of the problems that I've had with it. Because sometimes it'll go up, hit my trailing stop, and then find support off my trailing stop some magical way, and then shoot up. No, the 9100 was not an example. But if you use trailing stops, then and it works for you, good for you. Keep doing it. There is no certain percent you want to risk. You want to at max risk 5% of your account when it comes to a stop loss. Never set a stop loss of more than 5%. So if you take a trade with a $9,100 account, 5%, you do not want to lose more than $455. Okay? You do in that trade, you don't want to lose that much. That's way too much though. You should not lose that much. Usually when it comes to stop losses though, it's better to identify them with your candles, not certain percentages. How long did it take me? Over 6 months. It does not come just like that. It has to work. You have to study. You have to work. What is the 250 number? I don't know what you mean there. Yes. Don't marry a trade. If it is going in the wrong direction and for some very stupid reason you don't have a stop loss, get out. Don't hold it. I hate when people tell me I'm going to marry. I have people tell me they're going to marry a trade and just wait for it to go back up. I can't wait for you to lose hundreds of pips so you can learn your lesson. I hate when people do that. I never wish failure upon someone, but I always hope for knowledge to be gained within a human being. And that knowledge will be gained. And if it's not, then you're never going to be a trader. There goes my computer. I'm not giving out a broker. Alright guys, I'm probably gonna the double Bollinger Bands, sometimes. Yes, the 250 number, that's how much one lot cost with 1 to 200 leverage. Any trades? Oh crap, I didn't analyze yet, did I? Hey, can someone tell me what pair we looked at whenever I said it'll end up down somewhere? I completely forgot. Somebody told me how many hours I grind a day. I wake up at 6 and I go to sleep at midnight. That's typically AUD. It wasn't AUD USD though, was it? Look at that. Didn't we call this short? Look at that. Was that not beautiful? Didn't I not say, though, that the probability of it making lower lows was higher? Look at that. I know it was a AUD pair that we thought might fall, but I can't remember. Is it? No. Euro AUD? No. Was it GBP AUD? AUD CAD? No. AUD NZD? No. Was it GBP AUD? So, are we all good on the new strategy? Are we all good on the new strategy? Are we good? Last minute questions if you're confused. Yeah, replay this. Take notes. Sometimes I use harmonics. Sometimes. Yes, I do trade it. I actually, yeah, whoever pointed that out, that's right. I wake up at 6, go to sleep at midnight, wake up at 2 to look at any potential trades, which is a London open for me. Go to back to sleep at 4, wake up at 6. And typically, and when it comes to aftermarket US, I'll sleep. Like today, I slept for 5 hours. So today, I slept from 12. Technically, I slept from 12 to 2, so I got 2 hours of sleep there. Was awake from 2 to 4, went back from 4 to 6, so that's another 2 hours. So that's 4 hours of sleep. And then I came back today and I got another 5 hours. So I got 9 hours of sleep today. Best times to trade are London Open and London Close, and the US Open and the US Close. Never in the in-between BS. Market opens and closes. Never the in-between time. You're not going to get much action at noon on a Wednesday. It's going to be a lot of people are going to be at lunch. People are going to have their orders placed and they're off to their day. What do you mean? What do I mean? You trade at the London Open, the US Open, the US Close, and the London Open. You good there, Balky? Yeah, right, at the Open. At Opens, typically the first hour or two of the Open. And, yeah. And the last few hours of the Close. No problem. No problem. I do trade from school. I do trade from class sometimes if I need to. Nah, don't drop out of school. That's another thing. That's another risk management thing. If you trade, if you risk, you have to have a high school diploma. Because if all fails and all goes wrong, and you don't have your high school diploma, excuse my language, but you're fucked. Unless you keep, if you literally just can't trade, and you're in college, so that doesn't matter. If you can't trade, you for some reason can't learn to trade, say you've made $2 million and you lose it all in a year because you, for some reason, just sucked, and you don't have a high school diploma, I mean, you're completely fucked. I mean, it's all about your risk management. Now, if you made $2 million, you shouldn't lose it all. It's probably the best to get your high school diploma. Just in case. All right, guys, I'm gonna head out. I'm gonna head out here. I hope you guys enjoyed tonight's scope. I know I had a lot of fun. Go ahead and go look at charts. Go study this up. Don't take any trades right now. And if you notice something, go ahead and give me a message on Quad, and I'll take a look at it and tell you if it's a good trade or not. And yeah, I'll help you guys out. Yeah, no problem. I like doing this for you guys. Come back tomorrow. Who should we study? It's up to you. Yeah, if you could tomorrow, give me tons of hearts, share, get more people up in here. Let's get all this. Let's go kill it. We're all heading to the top. All right. All right. I'll see you guys on Quad and tomorrow night for chat.